Hello traders, welcome to our today's video. And in today's video we will go over today's day trade on the euro US dollar. So for those who are following me on my YouTube, you probably understand the way we approach the market on the daily basis. And of course our students made really nice trades so far in this new trading month. Today we had a great opportunity again, and if you have watched our weekly video, we said that on the euro US dollar we have of course the bullish structure, and when we have the bullish structure, that means that of course ideally we want to look for potential long opportunities, especially when the structure is bullish and we see potential retracements on the market in order to participate for potential continuation higher. So this of course strategy is the way we approach the market. We are looking for overall daily structure, 4-hour structure. We are looking for highs, lows, imbalances, of course the liquidity levels, and then we use the lower time frames such as 15-minute time frame or lower, depends on your trading plan, in order to look for that of course setups in direction of the main trend. So euro US dollar 4-hour time frame, we prepared the charts here, we prepared the screenshots, we are going over this trade step by step. So we are always looking for the same criteria on the markets for us to participate into potential trading opportunities. Now on the euro US dollar, as you can see, this was the plan for today's morning. We are on the 26th of January 2026. So just by looking at the 4-hour time frame, we can see that overall structure, the bullish structure is here, and over the night we saw nice move to the new highs up here. We established this highs at 1.19 level almost, and when we open the charts at the morning in the London trading session, what we notice is that market formed this kind of a potential higher low here. Market retraced, and it retraced exactly to this fair value gap, the imbalance on the 4-hourly time frame. So once this low was established, what we noticed on the lower time frame, on the 15-minute time frame, as you can see, this is the 4-hourly low. What we notice is that on the 15-minute time frame we saw, as you can see, we already saw this move to the upside, potential structure shift, but this is where most traders get lost. They make bad trading decisions because most of the traders, they will think this is the structure shift they are waiting for potential opportunities, because as you can see here, we had lower low, lower highs, market established after it took this Asian session lows. After this liquidity was taken, we noticed we had this higher low, new high, we had this also bullish fair value gap imbalance here, and most of the traders they are doing this thing wrong, because they will look for long opportunity here, but you shouldn't just look at the lower time frames. What you need is the higher time frame liquidity. You don't just go straight to the 15-minute time frame or lower time frames in order to look for that structure shift to form, but what you want is of course the hard time frames liquidity. And of course the hard time frames liquidity means that you're looking for levels at least 1-hourly time frame or higher. I prefer the 4-hourly because this is where the path to least resistance is. And as you can see on the 15-minute time frame, we noticed this shift to the upside, but we said we don't have any hard time frames liquidity yet. to be taken. So this was our hard time frames liquidity, and our plan was, of course, for this liquidity to be taken first, and then we'll be looking for a potential shift to the upside, shift to target these highs of the day, to target at least Asian session highs and then highs of the day up here. So going forward, at that point of time, we didn't take any action here, but going forward, that's how the daily chart also looked like. As you can see, the bullish structure is there, and on the 4-hourly, as you can see on the 4-hourly, what happened? This is the liquidity, the 4-hourly candles low. This liquidity was taken, and that's exactly what we were looking for. As you can see on the next candle, market pushed to the downside. It took this liquidity of the 4-hourly previous candles low in combination with this hard time frames 4-hourly fair value gap imbalance, in other words, and this was our alert to start looking for potential long opportunities in order to target that high of the day, that continuation to the upside. Now going forward, this is how also 1-hour chart look like for your information, and this is the chart, the 15-minute time frame. If you remember, before we said that once this hard time frame liquidity was established, we didn't take action on this 15-minute time frame structure shift to the upside. We were waiting for this hard time frames liquidity to be taken first, and this is exactly what happened here. As you can see, market spiked, took this hard time frames liquidity out of the market, and we saw immediate reaction to the upside. And what do you notice here? We had nice inverse fair value gap zone here, the imbalance, and we have entered it exactly on confirmation. As you can see, market was pushing to the upside. We have entered it, stop loss below the structure, below the lows of the day, and our objective was for the price to move at least to the Asian session highs or the highs of the day up here. So in this case, we were looking for around 1 versus 2 in terms of risk and reward ratio. So going forward, as you can see, the stop loss was around 17-18 pips. We took this inverse imbalance on the 15-minute time frame. After this hard time frames, liquidity was taken within that 4-hourly imbalance. We had 1% risk. We were looking for 1 to 2 in terms of risk and reward ratio, and we wanted to target here I made a mistake, it's not Friday highs, I meant the highs of the day here, and in combination with the Asian session high, this was our target in between. And if you go forward here, we didn't have any news at all. It's Monday, New York session, the lows of the London session were taken out here on this liquidity spike. So this was our entry. As you can see, our entry here, our stop loss was down there, 17 something pips, and the target that was achieved up here. As you can see, the nice move, the nice draw of liquidity towards the Asian session highs and the high of the day, where also market reacted and then pushed and retraced a bit. So this is perfect, great example of trading with the overall main structure, focusing on the hard time frames liquidity levels, the order flow, and that's the magic. Those are all the criteria I explained in this video that you want to focus on during the trading day, during the trading week. And if you can pull out consistently those kind of trades as per rules, then of course you will be successful on the long term. Of course, entries are something, but of course what is important is also your risk management, the trading mindset, and that you manage the risk correctly. This is very important. Anyone can just click the buy or sell buttons all the day, but what is important is that you stay focused, stay patient, you don't force setups when there are no setups, you stay patient, you have this mindset of not needing to trade, have this kind of a step back from the charts and just observe what is happening, and when the timing is right, when you see something based on your trading plan, then of course you want to take action, but with the right mindset, with the right risk management. And what I like to do is, once I enter into the markets, as per my rules, I just like to close the charts, let the market do its thing, and if you can focus on those kind of trades, of course you don't need to spend more than 20 minutes per day trading. You just wait, and then when the timing is right, you take action, or either not. So you set your stop loss, you set your target. Of course, not every trade will be a winner or a loser, but what is important that you can consistently focus and execute on your trading process with the discipline and the patience. So hopefully this video was helpful to you, and we catch up in our sessions, and of course on our YouTube channel. So take care everyone, and I wish you a lot of end of the month of January. So take care, and we catch up soon.